Joined now by Dmitry Zaytsev. Dmitry, welcome back.
Happy to be here, James.
Dmitry, you have a less than rosy outlook on upcoming financials that are going to be released starting very quickly here. Give us an overview of what you're thinking.
Yeah, so just big picture, I don't know if it's less rosy, but I think it's good to be realistic about what the expectations are from analysts, what the expectations are from investors, and what the numbers are that are actually coming out. So on this first slide, just to remind everyone, share prices go up and down, but the market capitalization of a lot of these firms has rallied significantly. So I have the top 8 cannabis firms by market cap here that are based in Canada. So they have
those numbers are in the billions on the left?
So it's in the millions, but it's 20, yes. So it's 20 billion, for example, if you're looking on the fourth line there.
Interesting. So weed's well up above 20 billion.
Yeah, and so some of the deals here haven't gone through yet. So it's as deals close and shares are issued.
Can we get that chart up again, please? Thank you. Okay, so Tilray's 25 billion. Oh, that's when it was at $300 a share.
Yeah, this is in Canadian dollars. Right?
Okay.
So this is just data I pulled from Bloomberg, right? And it's just layest data. But we're going to talk a little bit about what we think the Canadian market is worth, and once again, underscoring why we want to be in the U.S. names, in my opinion, longer term.
Okay.
So I think a lot of these names in Canada, they're good for trading, but the U.S. is where you're going to find actual fundamental value. So what I did was I looked at some OCS order numbers just to get an idea. So a little chart I have here or table on the right shows the October and November revenue numbers for all of Canada, and then you have the revenue numbers right there, 11.7, 10.1, which are the OCS numbers. And I have a rough estimate of how many orders were placed on the OCS during that time, and from that we can glean sort of a little metric there of around $70 per purchase. So that's what each individual order on average clocked in at.
Okay. So $48 million was for the month of...
It's 43 for the month of October, so which was only 2 weeks of legalization.
Right, and $54 million was the total sales across just Ontario.
No. So just to explain, all of Canada. All of Canada for rec.
Okay.
All of Canada for rec, according to StatScan. According to StatScan, I'm getting these numbers from StatScan, and there's a link below to the story where I'm pulling all these numbers from. So where does that really lead us? So looking on the next slide, you can build it out. So I just said, okay, we have 43 and 54 million. December, the OCS, the sales look like they kind of decelerated a little bit, but maybe more stores open in some other areas, but also people smoke less in the winter, but it's Christmas. So anyway, 150. So let's say 150 million revenue for Q4 of 2018, calendar Q4. And so what I then did is I said, okay, 60% of that is going to be captured by the LPs. I think that's generous, given they're selling for $4, $5, $6, and then a lot of this is excise tax and the margin for the actual retailer. And so all the LPs are competing for $90 million or so in Q4 of revenue. And so the next table below that shows the calendar Q3 revenues, and then what the analysts project for Q4 revenues and the high, mean, and the low of that. So some of those numbers, I couldn't get or whatever.
So the far right column is the analyst expectation?
So just the first column where it says CY Q3 is their calendar or latest Q3 2018 revenue number. So this is just, hey, before rec, sort of, to give you an idea. And obviously different companies have different year ends, and they all have their different quarters that start at different times. But anyway, so what the key column to be paying attention to is the one that I have in gray, and which just shows the delta between the average analyst consensus estimate and what the companies did in Q3. And so I'm trying to sort of square the $90 million number and this number. So mind you, some of these estimates, they include February and January data for 3 companies that I left notes there, but there's clearly a disconnect. And these are just the top 8 firms. It doesn't include private retailers. It doesn't include the multitude of other smaller LPs like Supreme or Vivo or...
This doesn't include medical numbers, I guess.
No, it doesn't. So I'm keeping it really simple. So I'm saying, hey, we're going to just assume they did the exact same run rate in Q4 as Q3, because it's that's a very complex number to try and project if you're going to try and estimate medical sales, international sales, new acquisition sales, and all that kind of stuff. But it's just to get a rough idea, right?
Okay, so are you telling me that the correlation to analysts' estimates versus companies' projections is skewed to the downside?
So no, I'm saying that the actual numbers that have come out so far indicate only about $90 to $100 million of actual wholesale LP sales from the rec market in Canada. And analysts, roughly, it's around 150 million that they're projecting, right? That sales are going to increase from the last quarter of these LPs on average.
Okay. So let's take Aurora, for example, projecting $50 to $55 million. And that constitutes a huge increase over Q4, blah, blah, blah.
Yeah.
So do you think that, are you suggesting that Aurora, that there's a disconnect between the available amount of cash to split up versus what companies are projecting?
Market share, I guess you would say, and yes, but I think Aurora is one of the names that actually will hit their numbers. So the 50 to 55, I think they could probably get there. And if you think about it, their last quarter, they had around $30 million of revenue. So if they increase their revenue by 20 to 25 million, and there's about $100 million pie to split, they're getting about 20% or so market share across Canada, which isn't crazy, and especially since San Rafael and some of their MedRelief acquired brands were getting very good reviews. And they also said something about OCS being 30%. They had 30% market share on the website. Could be very positive. And I think they wouldn't give this kind of guidance if they weren't going to hit it and maybe exceed it.
Interesting. So where do you see that taking the whole Canadian space for the rest of fiscal 2019?
Yeah, so I mean, I think the Canadian space generally, there's a lot of short covering, there's a lot of euphoria. I feel like a lot of the people that exited their positions in December and just went all cash, they're seeing 5-10% day over day moves, and they're getting FOMO. They want to make money too, and they're getting in. And
fear of missing out.
Fear of missing out, yeah. And they're just jumping in, and they're pushing this back up. And a lot of some of these names, they're starting to inch up to what they were pre-legalization, when there was really a lot of hysteria. But I would argue that these sales may cool things down a bit. So you're not going to go as low, I think, as December, especially if markets hold and all this. But you might have a little bit of a cooling down period where maybe some names will provide some opportunities.
Sure. So from your perspective as an options trader, where do the opportunities lie in that outlook?
So actually, something I've done today was I bought some puts on Chronos. So nothing against the company or anything like that. It's just it's one of those things that has gone parabolic right now. So the price changes and the percentage gains have increased at a shorter and shorter period. So usually
higher highs, higher lows in a compressed time frame.
Yeah. So for it to gain 50%, the period has halved. So if the first time it gained 50%, let's say since December, it took them maybe 2 months. Now, more recently, it took them about 3 weeks to do that again and again. And so now you're at this point where I think some kind of break of that could be imminent. But I'm not risking a ton of money on that kind of trade. And I could be wrong. But yeah, it'll be interesting to see. And I think the premiums were pretty fair for me to get into that trade.
Okay, so what about in the other names like Aurora, Canopy, Freya? Are you doing anything on the option side there?
Yeah, I haven't touched anything there. I mean, I had some covered calls that I wrote on Afria before, and so those are probably like the shares I got delivered from my put. Remember, I wrote the put, I got delivered, I held these shares, and I wrote a covered call. I've been writing incrementally covered calls on it. And so now I'm just going to wait for that to expire and my shares get taken away, and I got premium on the way down, premium on the way up, and the cycle continues.
Best of both worlds.
Well, you hope so, yeah.
Very cool. All right, so you were saying that you think that the U.S. companies are more likely to deliver actual good fundamentals on the balance sheet and in earnings?
On the revenue side, I think no one's looking at earnings right now. No one cares about any of this stuff. What everyone really cares about is revenues. Revenues, market share, because once you have a defensible market share, it proves that consumers are going to your brands and that you have your shit together and you can execute. Because everyone, like especially with the MSOs in the US, like a lot of them, as of the last couple of quarters, don't even have any revenue. And so it's really a show me story where you know, some of these companies could easily have a $200, $300, $400 million run rate within a year or so. And that's a very impressive number. And I also think generally, the longer it takes for the US to open up federally in terms of the States Act or anything else, it actually allows more of these MSOs to grab more licenses and more prime locations because the Canadian names can't participate. So it's actually, I think it's in their interest to actually not open things up. It's in the US names' interest to not open things up for the next year or two.
Interesting. Okay, well, let's leave it there for now. That's a great perspective. And of course, Dmitry, we'll have you back again very soon, but lots of food for thought there. Thanks for joining me today.
Thanks, James.